Two Brain Land! I am Jay Cohen, owner of Locomotion Fitness in beautiful Charleston, South Carolina. Longtime Two Brain business client, here to talk to you about how to live an amazing life as a gym owner. Love on your members, help your staff, and just be fulfilled, the reason you got into this. Today, I'm gonna talk about something that might not be the reason that you got into this. In fact, you might have actively been running away from doing things like this. When you had a 9-to-5 and were sitting there staring at a computer screen and made the leap to open a gym. And you did that thinking, yes, I can just work out all day long. Maybe not, but definitely that you could get away from a computer and actually make a change for people in their lives. Looking at things like financial statements, what we're gonna talk about today feels a lot like having a regular 9-to-5 gig. I get that. My background is actually finance. That's what my degree is in. So I stared literally at financial statements for a living. And because of that, I had a background and an understanding, but it's definitely not something that I love to do in my business. So I hear you. I know that this can be challenging and not nearly as fun or sexy as some of the other stuff that we do, like sales or marketing or coaching. However, it is so important to keep the pulse on your business and to know your numbers, because if you don't know your numbers, you cannot make good and informed decisions. Taking this back to the gym world, I just want you to think about this for a moment. Think about what you harp on your clients for. You get on them for tracking their data, right? We want to know what their squat numbers are. We want to know their Fran time. We want to know all of these important metrics, because that's how we can adapt what they're doing to make sure that they're hitting their goals and continuing to progress. If you don't have those metrics, you can't know what you need to implement in order to grow. Another thing that clients do a lot of times, at least in my gym, is they don't want to know where they are because they're scared. They have fear. They don't want to get on that InBody because it's going to tell me exactly what is wrong. But you can't fix what's wrong until you know about it. And that's the conversations I have with our members, and that's what I'm having with you right now. This is me asking you to take a hard look, to look at something that might be uncomfortable so that you can make sure that you maximize the potential of your business and you can give back to your staff and your members and ultimately to yourself. Now, I have good news. If you don't like crunching numbers, hire this out. It is so easy to find a bookkeeper and to get this thing off your plate. They're not even that expensive. I think my first bookkeeper was like $120 a month. And they classified all my transactions and put together a P&L, which we're gonna talk about here in a little bit. So that is $120 that if you get one member, because of a decision you made because you knew your numbers, it pays for itself. And then you don't have to be the one sitting in QuickBooks thinking, man, I got out of this for a reason, I don't want to do it. But it needs to be looked at and somebody needs to do it. So either get focused, drink a bunch of coffee, sit in front of your computer and hammer these numbers out, or hire somebody. Find somebody that can do your books for you. So there are three big sort of financial statements typically that I keep an eye on. And we're only gonna really dive into one today, but I at least wanted to mention the other two. So the first one is your balance sheet. And your balance sheet just looks at your total assets, your total liabilities, and your equity in the business. And it's just a really good way to see on paper, where are you? Do you have buildings? What equipment do you have? Like all of these things just give you a very clear snapshot where on that day, this is where your business stands. The next one is a statement of cash flows. And this is important because cash is king, right? If you run out of cash in your bank accounts, even if you have $100,000 that you know is coming to you in 2 weeks, if you can't make payroll, if you can't pay your rent, you're in trouble. So cash and knowing what's on hand is what comes from that statement of cash flows. The most important one that I'm going to talk about today is what's called a P&L, or a profit and loss statement. And this is what gives us a breakdown. The traditional model here is revenue minus expenses equals profit. In Two Brain, we really talk about the profit first model so that you make sure you're paying yourself for all your hard work. And that is revenue minus profit equals expenses. In other words, we're getting paid, and we're gonna figure out how we take the leftover money and allocate it back into our business. Because if you put the money back into your business first, you're never gonna have anything left over. You just have to take it. But that is for another video. So profit and loss statement. First thing that's gonna go on there is revenues, and what we like to focus on in Two Brain is how are those revenues connected to your net owner benefit, or what you are paying yourself. And what you're paying yourself comes in different buckets, right? There's like, as an employee of the business. So if you're still coaching classes, that's not you paying yourself as an owner, that's you paying yourself as an employee, but that still contributes to net owner benefit. Then we've got you paying yourself as an owner, or taking a dividend, right? And that it directly, obviously, contributes to net owner benefit. Then there's this other bucket that, talk to your accountant, right? I am not an expert, don't take my advice, but there are ways that you can use your business to leverage paying things that are both business and sometimes used in your personal life, right? Like a cell phone is a business phone. And your business should absolutely be paying for your cell phone. Again, talk to your accountant. I'm not an expert. We want to look at that net owner benefit and know that you are getting paid what you are worth. And seeing that number where you want it to be is going to be one of the strongest motivators that you have in your business. Another great thing that a P&L allows you to do is look at the different buckets of revenue coming into your business. So what services, what products, what things that you are doing, how much on a percentage basis are each of those contributing to your top line? Maybe you're recognizing by looking at your profit and loss revenues that you are putting 50% of your time into a nutrition program, let's say, and it is generating 5% of your profits. Now, that doesn't mean that you should stop putting any time into nutrition. But maybe you need to pull back on the number of hours that you're there, or maybe you need to pivot strategies because this one isn't working. The point is, unless you look at the various streams of income into your business and how those compile into the whole, and then how the expenses that trickle in from each of those are being pulled out are looked at, you're not gonna know where you should be spending your time, energy, and effort. So getting very clear on this program generates this revenue with these expenses, and this is how much money it generates. I cannot tell you the amount of stories that I've heard where people are actually paying their clients to come to the gym because overall it looks like they're profitable, but in this specific segment, they're actually losing money because they didn't think about overhead or staff cost. And obviously that's important to know. Next piece is your expenses. We have to keep an eye on our expenses. I learned this lesson the hard way. My revenue went up lockstep with my expenses, all the way from $5,000 to $40,000. I was like, surely I get to 20, everything's gonna be great. And then my expenses matched. Then it was surely I'm gonna get to 30 and everything's gonna be great. And then my expenses matched, right? Like it was lockstep up. I could not turn a profit, which is why bigger isn't always better. But when I looked at the things that were on my P&L, my expenses, I could decide which are directly contributing to my top line, because those things I need to keep, right? Those are investments in driving business. But on the flip side, which of those things are things that I can eliminate and almost no one's gonna notice except me. So a lot of times software can fall into this bucket, or maybe you're paying a cleaning company an inordinate amount of money and you have a member that can come in and do it for a lot less and maybe care a lot more and it looks better, right? There are plenty of ways that we can get creative on the expense front, but you've gotta know where your expenses are so that you can do some cuts and make sure that your business stays profitable. Then at the bottom line, then we get net income, what's left over. And that is where you can take draws or you can reinvest in your business or whatever it is you want to do with that cash. For the purposes of this video, I just want to get you to take some action. Make sure that you are working on your numbers, that you're not hiding in fear, because that is how you get stuck. We've got to get through the sticky point. Act like you would if you were one of your clients. I know that you would tell them to track data. I know that you would tell them that knowing the numbers is no different than not knowing the numbers, right? You're still the same. It's just now you know, you have more information so you can make better decisions. And that is what I want for you. All right, guys. This is the Two Brain Business YouTube channel. Hit that like button, subscribe. The notifications bell is your friend so you don't miss any of our content. Leave me a comment. Are you using financial statements? Do you have a great service that other gym owners in your state might love to use? Do you have any questions? Throw them in the comments below and we'll make sure we get to them. All right, guys, I'll see you next time.